Hey guys, what's up? All right, so in the earlier days, we had so many projects that we was invested in, and that's typical in a speculative market. So a speculative market is when an asset has volatility to where it is extremely volatile to where the price would just skyrocket to the upside, then it crash back down. It just all sporadic, right? That's because all emerging markets have not created what we call stabilization. So it's not stabilized. So the stock market as a whole is stabilized for the most part. Of course, you got your OTCs, which are called penny stocks and stuff like that. But when you think about the NASDAQ and the New York Stock Exchange, those big exchanges, the blue chip stocks they don't operate like that. So even though you look at the GameStop and what it did, that's not natural. Why did GameStop go control? We already know what happened, right? We know it was a short squeeze. But as soon as GameStop started to lose its valuation throughout the years, the stock got plummeted. There wasn't a lot of investors in it. It then became speculative. So what happened? It woof, because it's in a speculative nature now. Why is it in a speculative nature? Because it's about to die. It's not, unless they do something to revamp it and do their business model. But for the most part, it's dead. Okay, so but Disney, Apple, Google, the Amazons of the world, you're not gonna see that. You're not gonna see a Amazon spike up to $3,500 and then all of a sudden crash down to $1,200. Only way that's going to happen is something catastrophic, had to happen to Amazon. They had to do something crazy to the point where Amazon could actually go out of business type deal. It had to be something drastic like that. So when you think about all the cryptos and stuff, reason why we had many is because it was in a speculative market. We was invested in many projects that didn't have a working project. They didn't have a working product. They didn't have anything. So you just hoping that they will deliver on their promise. Normally when you invest in a stock, they already have something. It's not a promise. You're just saying, hey, you already got a product, you got a system, you got something that you're doing. You're already making money. So I'm putting my investment in for that. So look what happened to the .com bubble. Why was it a bubble? Because it was all speculative. Nobody knew what. People was investing in things that didn't even have a product. People were just saying, hey, we're an internet company. They came up with this elaborate thing that there's some problem that they solve, and it sounds real good, right? And then they get into it, and lo and behold, the founders of it got just a regular P.O. box, and really it was just a shell company. Put up a nice website and got you in there, investing, and the whole time they just taking people's investing money. It was just a scam. So when the .com bubble happened, it got to an enormous level, and because it went to an enormous level, it come crashing back down. Now, out of that, a lot of great companies were born, or they were already in that era, and they withstood this, the test of time. That is what we're about to go through again, guys. You're gonna have a lot of cryptos that's just gonna fall off the face of the earth. It's gonna be trash, right? Some of these products, they're not doing. They're promising what they can do, but we got to be careful. Are we using the tech that we're investing in? You get what I'm saying? You gotta really now, because what we're getting at now is, it's either that are you using it or is someone else using it. So we'll look at Cardano. I mean, they got contracts and agreements with nations now, right? So somebody's using it to get it. That's cool. It's getting out of the speculative thing, right? Then they got their smart contracts coming. It's getting out of the speculative. Now we're starting to get some stabilization, healthy growth. So my strategy now is totally changing. I don't want to have 15, 20 something projects. If you too speculative, I'm not going to put more money and capital on you, even though I know that I can make a lot of money possibly over there, because everybody's hoping that, it's going to get to $1 if they find something that, triple zeros and all that other stuff, and you're going to strike rich. So a lot of people, hope for that, right? So one of the strategies I am doing is that I'm reducing my holdings, and then I'm allocating more resources to those holdings to build it out. It's because if they're going to be here for the long haul, what I want to make sure that I got a big enough position that over time I can take profits without liquidating my whole entire position. So that's one of the goals. Now so I probably put in $25,000 worth of cash from 2016 up to now total, right? That's all that came out of my pocket to go in. Okay, the percentage game is just sick. Even though the percentage game is sick, if I could go back in time, and let's say Cardano wasn't a speculative asset at the time, but was a stabilized, going into the stabilized markets. Really, it already had a product that's doing something. At the price point that I found it at, had I allocated at least half of that 25K into that, I would have a little around $1.5 million dollars just off of that one, right? But if I were to put the whole in, around 3 million and some change or whatnot. So you see how focusing in on just a few projects. Now, what I really, I'm speaking in hindsight, so it sounds good. And I was like, let me put $12,500 at on this. What I would have did that back then, no, because I'm doing that based off the knowledge I have. So that's what I tell you guys. When you look at hindsight, it's easy to say what you would have done or whatnot. But here's the beauty. I already know that cycle is coming back again. So today, something I really believe. I throw $12,000-$15,000 on it. Yeah, that's what all those springboards. I had a whole bunch of springboards is just ready, right? And I hold on to them. And then when something presents itself, I'm going to roll it right over into that particular asset, and it's going to make sense. I'm going to go ahead and, through faith, I promise you, somebody watching this video, you're going to do the right thing, and you're going to have the right holdings, and the asset's going to take off, and you're going to be thankful that you're focused. And you're not even going to care that the other ones did well too, but you have something that is truly of value you hold on to, and you know that you can even pass it down, and you know that you can eat off of it without selling everything and just walking away with cash, which cash is trash. Even though we use cash, we do this, it's really trash because it's just so deep. It's just the inflation is devaluing it at just an alarming rate. You just need more. I told you guys before, when you buy a house, you're buying your house didn't really increase in value. Your house, it just costs more money for you to buy it. It's not increasing value. It just costs more money. So it's the same asset, but your dollar's worth less. So it takes more dollars to buy the same asset. Because when you think about it, especially, and you don't even have to add any vanities or anything to the particular house. Where the value really coming from? Think about the value. Where's the value? Think of all the things. The value. Where is it really coming from? It's just that everything else is increased in cost, labor, gas, all the other stuff. And by default, it rises all the other assets around too, and you just gotta pay a little bit more for it. So remember, number one thing as an investor, wanna beat, well, one is we don't want to lose money. But two, we want to beat inflation. And if your asset can't beat inflation, it's really no good for you. So that's why I put those numbers up. Like $20,000 invested in Disney in 1983 when I was born. It'd be worth $140 million today. That's an inflation beater. You get what I'm saying? So you got to think now. I have to immerse myself, understand these things, and be ready, because this is a new asset class, and in it, we haven't even seen we hadn't seen the most badass. We think Bitcoin badass. You got some shit that's coming that's gonna blow it out of the water. It don't even exist yet, or somebody in their mama's basement is creating it right now. Or maybe another country, somebody. Blockchain is here, and it's just like when we saw AOL on the internet. You know, we're like, yeah, AOL, they big, they doing it up. Man, where they at right now? Yahoo was a leading too. Yahoo, you know, the Googles of the world. You remember, Google went to Yahoo and asked them, hey, we want to sell Google to you for $1 million. $1 million. Yahoo turned it down. But even though they turned it down, a lot of people don't know, Yahoo owns billions of dollars of Google. So they invested in Google stock. All right? So even though we think that was a bad move by Yahoo, like you should have took it, because look at what Google became. Now, it was a great thing that Google actually didn't, that deal went sour. It didn't go through, because you never know how Yahoo would have treated Google. Right? We never know that Google may have not become what it is today, making strategic moves and buying YouTube and all the other stuff and expansion. Right? So, if you look at all that, before the Googles of the world, we was familiar with the Yahoos. Before the Amazons of the world, we was familiar with Barnes and Noble, Books A Million, I believe was another one, and I think that's the only two I remember. A couple other bookstores, but you see, somebody bigger and better can come along because they're improving the tech. Amazon's rise is really in the tech, like they perfected the tech, the processes, and things like that, and that's great. So blockchain is doing the same thing. You're gonna have somebody, they're gonna improve things, and it's gonna be great, and it's so much wealth that's gonna be made, guys. So much. But y'all gotta get out of that fear of them dang on red markets. Don't nobody look. Half of that shit is just speculative. It's all, some of that is speculative. But you need to be. Ethereum is not speculative no more. It's not. They producing something. Got it. It's the projects that doing all these promises of what they want to do, and then you look up, they ain't got it. They're just still working on stuff. That's why they call it roadmaps. You got a lot of roadmaps, they're not doing it. So these milestones that they're creating, we just happen to get in early. But once you get in this, guys, your mind has to be, I have to know where to look for the next opportunity. Now I'm here, and when it arrives, you're gonna be like, okay, it's so easy for me to transition into another asset. I understand this now because I have skin in the game. I've waited my turn. You guys, you gotta think. Look at how many big blue chip stocks out there now that are doing well, but didn't even exist in the 80s. They didn't exist in the 90s. So you can't think that, well, they got the advantage because Eric and the co-founders, they've been in it early, so it's easy for them. It's like, yo, you gotta realize, in the last year, 2 years, even in the stock market or even in crypto, there's been assets that we did not that didn't exist that we have in our portfolio. CKB did not exist when I started. StormX probably did. What was a new one? Hell, Solano. That didn't exist when I first started. None of that. You see, and look at what Solano did. How you gonna go from $1.34 to over $225? It's a lot, right? So don't think that because you join that you're not gonna have an opportunity. You're gonna have plenty of opportunity, and you're really gonna be better. You should be better than us to a certain extent, because we try to improve. I try to get better. All right? I got strategies I ain't even revealed to y'all yet. I try to get better. I ain't trying to sit here and think that I know it all. No, I get better. I try to learn. I got more. That's why. So I do contract work with the school system and stuff. Go down there and helping out kids and all that stuff, right? So, but is that taking me away from what I should really be focused on? So that's the big question. I'm at a crossroad right now. It's because I know what's coming. I know what I need to learn. I know that I get ready. This is serious. So I know your jobs, that y'all work, it's important and everything. But more importantly, your job is to build wealth. And sometimes a job can be a distraction. But some of you guys are trying to jump into some of the Forex, jump the fast money options to make the money so you can you be like, okay, I got a skill, I'm making consistent money, I can drop my job type deal. Like that's a little risky. I know what you're going through. I've done it. When my wife stopped working, I was like, I needed to replace her income, and I went and tried to do trading, and I was terrible because of my emotions. It wasn't because of the skill, it was because of my emotions. I was you trade, that your emotions is totally different. So you can do all the demos you want, you can do all the reading in the 2 courses, but it don't mean nothing when truly fear, hesitation, and all that stuff really manifest during your trading, and you'll find out quickly that, and then you'll start blaming systems. You'll be like, oh, this is rigged, this is not right. Like, nah, your psychology is jacked up. Simple as that. That's why I always recommend when people get started into the financial markets, their first rodeo to me should be investing. And that could be as simple as an index fund. Speaking of index fund, you're gonna start seeing index funds for crypto as well too. That to me will be the most easiest thing that you can do for your children or your future grandchildren. Even if you ain't got no kids, act like you got some future grandkids or something. That'll help you with the investing. And then when it matures, if you still don't have any children or you still don't have any grandkids, donate it to charity. Roll it into somebody that you know real well that they may have little kids. It's like, hey, I built this. Now it's mature. I want to pass it on. This is my knowledge here. I want you to pass it on. Here's what you do with it. You can do a 2%, 3% rule, meaning that you can take out 3% yearly out of the fund to do whatever you want to do, maybe every January or whatnot. You can be very creative with it. But those indexes are coming, or ETFs, whatever you want to call it. They're not fully ready yet. Well, certain investment companies have them, but for the public yet, they're not ready. But they will come, and you're gonna see Bitcoin, Cardano, Ripple, Ethereum, Polkadot, Solano. As you can see, all those things gonna be added in, and you'll be able to buy those. You'll be able to buy one index with all those things. So now you got exposure. So instead of you going out here trying to get 15 different cryptos, they all be clumped into one and whatever. So even if Dark Horse, all the coins that we have, our index fund, if we put them all together, index fund, will be up at least 1,500 or more %. All right. So that means, let's say the Dark Horse coins was an ETF. What we'll do is, let's say we did the average of it, and then it's worth, I think we did the math before. I want to say it came out to like $30-something was the initial, the value of it. And I don't know what it'd be now. It'd be way more than it is now, almost to the $500 something or more. But that's how it would work. Have we thought about doing the ETF? Yeah, we done done some research. We'll see. It possibly could work. But that takes a lot of stuff. I know people throw out those ideas, but those ideas like that, it takes a lot of infrastructure and work. You gotta understand, most of us, over 99% of us in this group, I think there's a few that's really into banking. We got a couple bank executives in here, but they don't have the expertise in building the infrastructure on that and with the underwriting and all the other stuff. I know crypto is free market, but at the same time, you still gotta have that. You gotta still have some form of regulations with that. I can't just get up here because then somebody could treat it as a security. We don't have all that in there. So, but there is ways that possibly we could work with someone to create what we call maybe the first decentralized index fund. That could work. If any of you want to take that idea, go run with it, develop it. You know, some of your Dark Horse members will help and back you and give you support that you need. Be creative, guys. It's a lot of stuff out here. It's a lot of business opportunities, a lot of things you guys will be going, but I would suggest that you start with a niche, find something that nobody is really doing, dominate it, control your lane, and make it happen. Stop looking at crypto as, oh, I just buy and hold. Get your behind out there and build some business or something around it or whatnot. You know how many people around the world, or just in the United States alone, that really, truly don't know what this stuff is? Those are opportunities for you. Those are opportunities. Yeah, you free game. It is what it is, right? So, I hope that video helped. And I know that was too long, but y'all have a great one.